Hello and welcome. Good morning. You're watching Market Cafe with me, Snehisha, and along with me is Lisa Fernandez, and this is ET Now. Now, this is a show where we'll take you through all the important global stories that we've been tracking for you. And in the second half of the show, we'll also look at all the stocks that could be potential buzzers in today's trading session, as well as what brokerages are flagging out for us bright and early this morning. So, with that, Lisa, let's kickstart the show with the global handover and tell us what the US markets and the European markets look like.
So it's pretty much the same picture that we saw yesterday. The Monday sell-off rubbed off on Tuesday as well. So talking about the Dow Jones as well as S&P 500, they slid on Tuesday as a recent rally on Wall Street that is losing steam as per the investors. But the outlier that was Nasdaq, because it gained 0.3%, as we know that there is an inverse relationship between the treasury yields as well as the tech stocks. So the 10-year treasury yield that fell below that key 4.2% level, and this move it came on the back of the data signaling cooling in the labor market, because the October job openings that slid to the lowest level since 2021. The job openings showed around 8.7 million roles in October, and that was below the consensus estimates of 9.4 million. So that data is welcome news for the investors, hoping for evidence that the prior interest rate hikes have had the Fed Reserve's intended impact on the economy, and that the Fed may hold the rates in the next meet that is scheduled in mid-December. But despite the losses, the three indexes, they are still up on the quarter, and for the year they are seeing gains coming in for the quarter as well as for 2023. Now on the flip side, European market that largely closed higher. Stock 600 that was up 0.4%, DAX was up 0.7%, and talking stock specific, Ericsson that climbed on the 80 anti deal as Nokia fell below that it to its 3-year low. And talking about the UK households, the data is coming in that there was some delayed Christmas spending in November, and that is leading to the damp retail sales. So yes, that's largely the handover coming in from the US as well as European market, and the highlight was the treasury yields that has fallen below the 4.2% level. It's from the peak that we saw 5% in way back in September. So yes, that seems like some good news. But what's happening on the crude as well as gold prices? There's some cooling off action happening out there?
Absolutely. So some cool off that's being seen on the gold as well as oil prices. Let's start by looking at oil prices first. And oil prices have fallen nearly to a 5-month low on Tuesday on a stronger US dollar and demand concerns, putting the market down for a 4th day in a row on doubts over OPEC Plus announced voluntary supply cuts last week. Let's look at what oil is doing as we speak. And oil is WTI crude at $72 as we speak, and Brent at 77 as of now, well under that $80 per barrel mark. Now, last week, this morning, Russian Deputy Prime Minister Alexander Novak was reported as saying that OPEC Plus stands ready to deepen oil production cuts in the first quarter of 2024 to eliminate speculation and volatility if existing actions to cut production were not enough. Now, remember, just a few days ago on the 30th of November, OPEC Plus has agreed to output cuts of about 2.2 million barrels per day for the first quarter of 2024, but at least 1.3 million barrels per day of those cuts were an extension of the voluntary curbs that Saudi Arabia and Russia had already put in place earlier. Now, the Kremlin said that the OPEC Plus production cuts will take time to kick in, and Russian President Vladimir Putin will visit OPEC members, the United Arab Emirates and Saudi Arabia today, and he will also be hosting the Iranian President Ebrahim Raisi in Moscow on Thursday. So, well, let's see how these talks around oil prices pan out for the oil market. But this is where it comes to the supply side. Let's also take a look at what's happening on the demand front, and you can see some demand concerns happening because elsewhere, countries at the COP28 climate conference are considering calling for a formal phase out of fossil fuels as part of the United Nations summit's final deal to tackle global warming. Now, in the United States, the dollar has also risen to a 2-week high against a basket of currencies after fresh employment data showed that US job openings dropped in October to the lowest level since early 2021. Now, remember, a stronger dollar can reduce oil demand by making the fuel more expensive for buyers using other currencies. However, on the other hand, Wall Street is also expecting Fed to start cutting rates going next year. So, lower interest rates, meanwhile, could increase oil demand by making it cheaper for consumers to borrow money to purchase more goods and services. So, well, contrasting views when it comes to the demand side, when it comes to oil. So, well, Lisa, let's see how this pans out for oil markets.
Right, and the much-awaited RBI MPC policy meet that will begin today. So yes, all eyes will be on that MPC meet. It's a 3-day meet, and on the other global cues that we have, the US trade data that will be slated for release. We also have the Bank of England's biannual stability report, as well as Eurozone retail sales that will be out. On other action, we have the Eurozone PPI as well as the US crude oil inventories also. On the back home, on the IPO action front, the lock-in period that ends for Star Health as well as Dharmaj Crop, and on the corporate action front for SEPC, the right issue that opens, it's at around 13 rupees per share, and Paytm analyst meet that will also be held, and mainly they'll be talking about their loan distribution business. Hindustan Zinc, the board will be meeting to consider interim dividends. So all eyes will be on these cues.
Absolutely, and let's shift focus to some global news and updates now, and we'll bring you the latest from Gaza, because more than 16,000 Palestinians have lost their lives since the war has begun in Gaza. Hamas officials have said that there will be no negotiations with Israel on further captive releases until it halts its offensive. Israeli military has in fact intensified its attack on central and southern Gaza, with dozens dead in the ground operations conducted in Khan Yunis. Meanwhile, the UNRWA says it expects the number of displaced people in Rafah to increase to more than 1 million in the coming days.
That's some somber news coming in, but now shifting focus away from geopolitics, the job openings in US that has fallen to a 2.5-year low in October. The data pointing towards the fact that fewer workers are resigning, which over time could help ease the wage inflation. And the drop in the openings, that's the strongest sign that interest rates were dampening demand for workers, therefore boosting expectations of the Fed nearing its policy tightening cycle.
Well, let's shift focus from the US to China then, because ratings agency Moody's has downgraded its outlook on China's credit ratings to negative from stable. Moody's has, however, retained China's A1 long-term rating on sovereign bonds, while expecting the country's annual GDP growth to slow to 4% in 2024 and 2025 and average at 3.8% from 2026 to 2030.
And a new high for Bitcoin yet again, building up an upward momentum. World's largest crypto asset, Bitcoin, has now topped that $44,000 mark for the first time since April 2022. And the cryptocurrency has been breaching new highs more frequently over the past several weeks, because there's optimism around the likelihood of a spot Bitcoin ETF approval that has been the main force behind this up move.
Well, let's talk about Apple then, because Apple's market cap has closed at around $3 trillion for the first time since the month of August. Now, the company's market cap had officially crossed the $3 trillion mark for the first time in June. Remember, the milestone is a sign of Apple's durability. The iPhone maker's stock price has risen over 48% so far this year.
And on to some interesting data. Tech giant Meta is looking forward to 2024, and it expects Indian Gen Z users to dictate the global trends on Instagram. In fact, they have also shared some very interesting insights about the Indian Gen Z. Bhavya is here to break down all the data for us. Bhavya?
Right, so Gen Zs are taking over 2024 because according to Instagram's Trend-Setting Insight report, Indian Gen Z has emerged as trendsetters influencing culture on Instagram. From diverse food trends to a strong focus on career and personal growth, they prioritize unique interests. Let's look at what these unique interests are. Number one, they are a trendsetter. Whether food, beauty, and fashion trends, Indian Gen Z have shown a heightened inclination to embrace and explore emerging trends. Whether it's Ayurvedic ingredients, vegan products, plant-based meats, and adopters, Gen Z in India are most excited to try diverse food and ingredients. The next one is that they are very career motivated. In 2024, Gen Z in India have ranked staying healthy, exploring career paths, and traveling as their top priorities. However, in contrast to other nations, Gen Z in India exhibit a stronger focus on their career pursuits. 43% hope that 2024 will be their self-improvement era, and as compared to other countries, Gen Z in India also believes starting your own business is the best way to achieve wealth. The next one would not come as a surprise because they believe That memes is what connects them with someone on Instagram, apart from liking their feed posts and interacting with their stories. Actually, a third of Gen Z respondents in India picked bad taste in memes as their top turnoff. Apart from these, they also demonstrate a greater enthusiasm for creatively showcasing fashion trends, whether it's get ready with me or do it yourself. So 44% of Gen Zs in India are interested in DIY and wearing clothes in unexpected ways. And a fourth of Gen Z said that their favorite beauty trend is getting a new hairstyle. Well, that's not a surprise as well. Apart from these, most Gen Zs in India belong to a particular fandom, whether it's sports, whether it's BTS Army, music, Shreya Ghoshal, A.R. Rahman, or a particular movie genre. 9 out of 10 Gen Z in India consider themselves a part of a fandom, and India has the highest percentage of sports superfans as compared to Gen Zs from other countries. Last, but the most important one is that they want relatable content, be it from celebrities, athletes, or creators. What Gen Z want the most is relatability. This holds true globally as it does in India. Specifically for Indian Gen Z in 2024, they look forward to content with life advice, more everyday day in the life of content, and content about their professions. So if you are a Gen Z and you're watching this video, do let us know that which point did you relate the most to.
All right, Bhavya, interesting data coming over there. Very interesting Gen Z trends on Instagram. Well, with that, let's slip into a very short break on this edition of Market Cafe. When we return, we'll take stock of the Asian markets this morning.
Welcome back to the show, and thank you for staying tuned in. Well, we are at the close of the year and it's been a roller coaster year for the market as well. So while the market is at lifetime high, there have been some individual performers and some duds that have kept the market active, and for that, Somit is here to take us through that list of stars as well as the duds.
Well, as you see that 2023 has come to an end, we bring to you a list of stocks that have actually outperformed or underperformed the street expectations set by the analysts at the start of the year. First, moving on to the underperformers. Now, these were the stocks where analysts were expecting a strong return potential for 2023, but the stocks have failed to do so. Green panel tops the list. Analysts were expecting a 61% return potential at the start of the year, but the actual gain so far for green panel has been just 3%. Now, this lower gains has been because of price correction in the export market and because of a steep reduction that we have seen in the MDF volume growth guidance given by the company. UPS Street was expecting a 42% return potential, but the stock is down nearly 19% so far for 2023, and this is because of the high inventory that we have seen globally and because of lower product prices. When it comes to Aavas Financiers, analysts were expecting a 39% return potential, but the stock is down around 22%, and this is owing to the top management changes and because of lower than peer disbursement growth that we have seen for Aavas Financiers. For Aditya Birla Fashion Retail, 33% growth was what the street was expecting, but the stock has been down 19% so far, and that is owing to weak margins and its high leverage that we have seen on its balance sheet. And lastly, when it comes to V-Mart, analysts were expecting a 27% return potential, but the stock is down nearly 36%, and this is owing to weak revenues, which was owing to price cut and weak demand environment that we have seen for V-Mart. Now, when it comes to the outperformance, BHEL tops the list. Analysts were expecting a 36% downside on the stock at the start of the year, but the stock is up around 120%, and this is owing to the government's more focus on power infra and because of its cheap valuation at the start of the year. When it comes to KPIT Tech, analysts were expecting a 1% downside on the stock, but the stock has gained around 113%, and that is because its presence in the niche engineering research and development business, which is more focused on autos, and autos did well in 2023. And along with this, peer also came out with its listing, which also led to a re-rating when it comes to KPIT Tech. Jyoti Labs, analysts were expecting upside of only 10% on the stock, but the stock has gained 117%, and this is because of the margin expansion and volume growth, which was better than peers consistently throughout the year. When it comes to Cyient, 15% upside was what the street was expecting, but the stock has gained nearly 170%, and this is owing to value unlocking. We saw the listing of Cyient DLM, which was a hit listing on the stock market, and also its performance was much better than peers. And lastly, when it comes to Prestige, street was expecting a 29% upside for 2023, but the stock is up around 138% so far in 2023, and this is owing to the new launches and the strong pre-sales growth that the company has shown so far in 2023.
Well, that's an interesting list of the top underperformers as well as outperformers of 2023. Thanks, Amit, for taking us through that. Let's shift focus then. And after launching auction of critical minerals last week, the government has initiated the process to decide the average sale price of 11 new critical minerals. My colleague Prakash Priyadarshi had filed this interesting report earlier. Listen into that.
Yes, the government has initiated the process to decide average sale price of critical minerals in the country. Mines Ministry has issued a consultation paper to seek stakeholders' views on this development. A very significant development coming in, especially in the context of reducing import dependency as far as critical minerals are concerned. We are also given to understand that a methodology to derive average sale price of 11 critical minerals will be decided going forward. As you are aware that the government has already announced first tranche of auction process for 20 critical minerals blocks in the country, and now the process has been initiated to decide average sale price of another 11 critical minerals. We are also given to understand that these critical minerals are going to be used in the manufacturing of batteries, solar cells, filaments and surgical applications. In addition to that, if you look at the categories of these critical minerals, these are titanium, cadmium, tungsten, among others. A very significant development coming in, as it will help government to fix bid parameters going forward. Eventually, government can speed up bidding process for all 24 critical minerals in the country. A very significant development coming in, especially in the context of becoming self-reliant in critical minerals production as well. Government has initiated the process.
Thank you, Prakash, for sharing that exclusive with us. But shifting focus on what's happening on the agri-commodity side. Well, the demand and the prices for millets in the market, that is on rise, and because of that we have the prices of jawar, ragi, bajra prices, they are sitting at record levels. But what's causing it? Well, Vinny is here to share an analysis and her perspective on the same.
Absolutely, we've seen millet prices that have been at a record high levels, whether you see a jawar, bajra, ragi and other types of millets have increased in the range of between 40 to 100%, and this is over the last 1 year, and this is according to some reports that we've seen, as well as the pricing as well. Look at the jawar prices as well. In the last couple of years, a sharp increase that we've seen. Last December 2022, jawar prices were somewhere around the 38 rupees per mark per kg, while as of now in December 2023, it's at around 60 rupees per kg as well. So a sharp increase in terms of the prices. Similarly, the trend is for bajra as well as in terms of ragi price as well have seen an increase over the last couple of years. Now, the main reason that we're seeing an increase coming in, it is the International Year for Millets in this year that we announced in India as well. And because of that, we've seen a lot of FMCG companies entering into this millet space. They've launched a lot of new products. Millets are now even a part of the breakfast cereal pack as well, and a lot of new launches that have come in, which is leading to an excess in terms of the demand that is required for these millets as well. So when you look at it, there's an in demand for the millets. Other than that, there's a launch of a lot of new products by these FMCG companies. So the need for these products has increased as well, whether you look at a pasta, noodles, snacks, everything that you get in a millet form as well, which is leading to an increase in terms of demand. Other than that, there's an adverse weather, bad weather, which impacted some of the areas which are producing millets as well. So when you look at it, there was drought in Maharashtra, Karnataka and Telangana this time around in those areas which were in jawar. Other than that, the brown crop areas also such as Andhra Pradesh, Karnataka and Kerala saw excess rainfall. So because of that, the crop was also not up to the mark. The production was not also as much as required. Plus the demand now that has increased, the production is not enough to subsidize that excess demand as well. Now that is something to watch out for. But as of now, when you compare the weightage in terms of the WPI for the millets, that's very, very small in terms of the percent that it comes in versus overall the WPI data. So in terms of inflation, analysts say that there could not be much of an impact in terms of inflation or move inflation higher because of millet prices going higher. So not a worry coming in on that front as well. But let's keep an eye out on these millet prices.
Well, Vinny, thanks so much for that roundup on millets and millets prices. But let's shift focus to a stock that will be in focus today, and that is Z Entertainment, because Axis Bank has moved NCLT against Z Learn subsidiary Digital Ventures. My colleague Ankur is joining in with all the details about this move. Ankur, over to you.
Yes, while a separate case with Yes Bank is underway at Supreme Court, another lender, Axis Bank, has filed an insolvency petition at NCLT against Zlearn subsidiary Digital Ventures. Now, this petition has been filed due to non-payment of dues, and the court has issued notice to the company regarding the insolvency petition. Remember, there was an announcement made by Zlearn earlier that it has signed an agreement with JC Flowers ARC for settlement of dues. Now, this was required because an ongoing case was continuing with Yes Bank, and after that, the company claimed that that settlement of dues has been initiated by the company because an agreement has been signed, but a separate case is undergoing in Supreme Court regarding insolvency petition. Earlier, a petition was filed by Yes Bank at NCLT, but NCLAT provided a stay on that, and after that the lender moved Supreme Court. And however, Supreme Court has not passed a verdict in this case yet, and after that Zlearn announced that it has signed an agreement with JC Flowers ARC. Remember, JC Flowers ARC, there was NPAs, all the NPAs of Yes Bank were transferred to the ARC after JC Flowers ARC was formed, and hence Zlearn account also went to JC Flowers ARC, and now a separate lender has claimed dues from Zlearn subsidiary, and it will be interesting to see whether or not insolvency is initiated against the company.
Thank you, Ankur, for sharing that update on the Axis Bank. But now moving on to an exclusive interaction that we had with New India Assurance CMD Nirja Kapoor. She talks about the company's product pipeline as well as the growth roadmap for the company going forward. Remember, insurance sector that has been buzzing off late, and that is especially on the back of ET Now exclusive news breaks that we broke the stories for you. So listen in to a bite of the conversation that we had with her.
Overall, we are aiming at reducing the ICR by the end of the this financial year, and reduction in the combined ratio. The target is to reduce it by about 5 basis points compared to last year, and we are taking steps in this direction by not just price correction in various like motor and health, but we are also doing a lot more work in claim control and improving our claim settlement, fraud control, and various other aspects which will help in the claims to perform better by the end of this financial year.
Ma'am, in Q2 you have taken hike in your retail health product. So what is the quantum of that hike? Because we have heard that that hike is after the 6 year, the gap of 6 years. So what is the quantum, and it will continue in coming years also?
See, earlier there was a guideline, it was not a directive, but there was a guideline from the regulator that the price increase in health should, in retail, should be every not more than once every 3 years. So we did intend to increase the price in 2020, but at that time there was the impact of COVID and the pandemic, and we didn't want to add to the the financial strain on the general public by increasing the health premiums. So that is why in that particular year it didn't happen, the price increase, and then subsequently we have done the increase in 23, and the price increase is ranging between 20 to 30%. Averaged would be about 25 to 26%, of course depending upon the age groups and where the claims ratio has been more adverse. We do not see this the price increase in this range likely to happen in the future years, because price increase basically has to reflect on the has to take care of the inflationary trends, and we do find the medical inflation is much higher than the general inflation. So what we are seeing, what we are trying to do is to reduce the impact on the public. Going forward, we would expect that this increase would be marginal every year.
Alright, that's an excerpt of the exclusive conversation my colleague Anurag had with Nirja Kapoor, the CMD at New India Assurance. But with that, we'll slip into a very short break on Market Cafe. More stock-specific news and updates when we return.
Welcome back to the show, and we are on that part of the show where we talk stock specific, the stocks that can be potential buzzers for today. And for that, we have Ashesha to take us through all that list. Ashesha, good morning. Take us through that the stocks that can be in action today.
Hi, good morning. So first up, let's talk about Bank of India, and this one will be in focus on the back of their fundraising plans, where QIP issue opened yesterday. It's worth about 4,500 crores. The floor price has been fixed at about 105.42 rupees per share, which is at a 4.5% discount as compared to yesterday's closing price. So on account of these fundraising plans that the company has informed the exchanges about, Bank of India will be in focus today. Let's also talk about Green Panel Industries, where the company has informed the exchanges that company's MDF plant, which is located in Andhra Pradesh, has been disrupted because of the cyclone. Perhaps some temporary disruptions over here, and hence Green Panel will also be in focus today. Let's also put the spotlight on Sun Pharma, where the company said that one of its arm has entered into a licensing agreement with Aclaris Therapeutics for immunoinflammatory diseases. Some approval coming in with respect to company's arm, an important approval, and hence this counter will also be in focus today. Let's also talk about Hindustan Zinc, where board meet is scheduled to happen today to consider interim dividend. Remember, Hindustan Zinc is one of those counters which has high dividend yield, and hence any dividend announcement is important with respect to stock price movement. Meanwhile, Ion Exchange will also be in focus today because Ethigen Inc. has filed an arbitration claim against the company to the tune of about 149 odd crores. So the quantum is huge, and hence this counter will also be in focus today. Meanwhile, let's also talk about Honasa Consumer. Big deal happened yesterday. Counter will be in focus for the second consecutive session. PE firm Fireside Ventures sold about 1.9% stake in the company via block deals yesterday, worth about 230 odd crores, and Norges Bank acquired 25 lakh shares as a part of this block deal. Remember, a whole host of other counters were also in focus today. The likes of Shriram Properties, where TPG has sold its entire 9.99% stake in the company worth 190 crores, and Sapphire Foods, where promoter entity has divested 4.2% stake in the company. All of these counters will be in focus for the second consecutive session today. Alright, Achecha, thanks for taking us through that list of all the stocks that will be potential buzzers in today's trading session. We will be keeping an eye out on all of that, but let's shift focus and take a look at what brokerages are flagging off for us this morning. And we have my colleague Vamakshi joining in to take us through a list of brokerage notes this morning. Vamakshi, good morning. What are brokerages flagging off?
Well, yes, a very good morning to you, and let me first start off with the auto sector that will be in focus on the back of a brokerage note that has come in from CLSA, and they have highlighted that the stocks are now fairly valued after the recent rally that we saw in these counters. They have also highlighted that the two-wheeler segment is seeing some bit of a recovery as far as volume growth is concerned. Apart from that, affordable electric two-wheelers, however, are expected to drag margins, but nevertheless, the premium end of the market is performing quite well, and in fact, they're expecting the premium motorcycles to grow faster. So given all of these factors, they've actually downgraded their rating on Eicher Motors, Bajaj Auto, as well as Hero MotoCorp, while for TVS Motors, they've maintained their sell call. Apart from that, keep an eye out on Jubilant Ingravia. The stock is in focus on the back of a brokerage note that came in from Incred. They have highlighted that the company's products, the demand for them is actually falling. Pain is continuing in the life sciences division, and there are quite a lot of headwinds that are in place for Jubilant Ingravia. Not just that, cyclical recovery for this counter is far away. So given all of those factors, Incred has maintained its reduced rating on Jubilant Ingravia and also gone ahead and cut its target price to 364 rupees per share. Lastly, let's also focus in on the power sector. Jefferies Power Summit was held recently, and here are some of the important takeaways from that meeting. They hosted NTPC, IEX as well as CRC in independent sessions virtually, and what they have highlighted is that peak power shortages are here to stay for at least the next 18 to 24 months. Power demand strength is being driven by both the industrial sector as well as households. In fact, they believe that as India enters a phase of capex-driven GDP growth, the power intensity should also rise. So given these takeaways, keep an eye out on all of the power counters as well.
Ramakshi, thanks so much for taking us through that list. Autos and power, the themes that will be in focus today on the back of these brokerage notes. But we're also getting another note from Nomura this morning on their India strategy, and they say that they will be buyers on dip, assuming the policy continues, and they're seeing strong top-down narrative on the China Plus One theme as well. They're saying macros are also strong even as cyclical slowdown is expected. Let's take a look at what else they're saying, and they're looking at some market tailwinds. So what's working for the Indian markets? They say that the K-shaped economy, high earnings growth, as well as domestic flows tend to be in India's favor as of now. They're saying that the large liquid market and a counterweight to North Asia is being seen if the slowdown in the West occurs and China continues to disappoint on recovery. They're adding that India has seen high quality stocks, albeit they're expensive at the moment, but they're high quality nonetheless. However, Indian stocks are less exposed to global trade slowdown, and prospects of rising FDI on local manufacturing push seems like a good thing for the Indian markets. Financialization of the economy also seems to be working out. Now, Nomura is betting on a mix of reasonable valuations of domestic growth stocks and stocks that are beneficiaries of structural themes as well. Let me take you through a list of the top bets coming in from Nomura this morning, and that list has a whole host of stocks like ICICI Bank, Axis Bank, L&T, Reliance, Godrej Consumer, Fortis Health, M&M, as well as Uno Minda. So, well, this is a brief of the Nomura note that we're getting on their India strategy.
Right, and even Asian Paints will be in focus as Macquarie has come out with a note and they remain upbeat on Asian Paints, and this is after the management reiterated double-digit volume growth for the second half of the year. Well, let's look at why they are bullish about Asian Paints. Well, Asian Paints has an outperform on, Macquarie has an outperform on Asian Paints, and they have given a target price at 3,800. The strategy is that Asian Paints will be focusing on the budget end of the market, and this is to outgrow the industry, and they will be also launching differentiated offerings in the budget end of the market. They will talking about Grasim, which will be launching their products and which will increase the competitive intensity going forward for the paint industry as a whole. Asian Paints have said that they will be dictating the pricing in the retail waterproofing segment, and they don't see much competition, the pressure coming in from Grasim. So yes, that was on Asian Paints, and it will be in focus on the back of this note coming in from Macquarie.
Absolutely, Lisa. And another stock that will be in focus is going to be Patanjali Foods, because it conducted its investor and analyst meet yesterday. So how did the business fare in the first half of FY24, and what's the outlook ahead? Sharad is joining in with all the key takeaways from this meeting. Sharad, over to you.
The four key themes emerging from the Patanjali's meet includes premiumization, backward integration, brand upliftment, and also the digitalization part. Now, importantly, the company will be launching more premium products in the segments of dry fruits as well as sports. And also the company has roped in MS Dhoni as their brand ambassador for their soya bean oil. Importantly, the company mentioned in their investor presentation that they will be expanding their oil plantation capacities, and also the commentary has come that they will be expanding their food business in the southern Indian markets. Apart from this, for the biscuit business itself in focus, there will be launches coming in the choco chip and handmade cookies segment, and also a brand upliftment exercise would be coming in the urban markets for this segment. Lastly, they will be also focusing on growing the premium segment of their edible oil business, which has a major chunk of contribution coming to the revenues. So overall, the focus would be on the premiumization and the brand uplifting part. That is what is a key takeaway coming from this analyst meet.
Thank you, Sharad, for sharing the takeaways of Patanjali, which will be in focus today. But moving on to some important stories lined up. Cyclone Mishong has weakened to cyclonic storm, but it has left behind a of deluge, destruction and devastation. At least 17 people have been killed. Schools remain shut in Chennai as well as Odisha. And after days of suspense, Telangana finally gets a CM name. Congress High Command picks Revant Reddy to be the new CM of Telangana. He is to visit Delhi and resign as a member of parliament today. Oath-taking ceremony that is scheduled for tomorrow.
Well, Telangana, that's one state down, but the suspense over chief ministers over the other three states continues. JP Nadda will meet PM Moody and discuss chief ministerial probables for Madhya Pradesh, Rajasthan and Chhattisgarh today. And the INDIA blocked to hold informal meeting today after facing a snub by key leaders. The representatives of the parties to attend the meeting, and the huddle is likely to take place in the third week of December.
And that was all the time we had on this edition of Market Cafe. Thank you for staying put, but stay tuned on the channel as we take the action forward to the market. For now, so thank you and a goodbye from me as well as Nehi.